When people think about terrorism in Pakistan, they think about human tragedy. Over 90,000 Pakistanis, mothers, children, doctors, engineers, businessmen, ordinary citizens, and security personnel lost their lives. But here's a question. What did terrorism cost Pakistan economically? The answer is staggering. According to the Pakistan Economic Survey 2017-18, Pakistan had already suffered economic losses of over $126 billion because of terrorism and spillover from war in neighboring Afghanistan. But by 2025, that figure had crossed over $152 billion. So where did all that money go? It wasn't one single loss. It was thousands of economic shocks hitting Pakistan all at once. Some losses were immediate, destroyed roads, bridges, schools, hospitals, markets and power infrastructure. Others were invisible, investments that never arrived, businesses that never expanded, jobs that were never created, and opportunities that simply disappeared. Exports declined, foreign investors exited, factories slowed, supply chains broke, and industrial output declined. Tax collection and economic activity slowed. And what does that lead to? A rise in debt, and Pakistan is still paying the price in terms of major allocation of budget going to debt servicing. Then came the biggest hidden cost. Economists call it the cost of uncertainty. At the same time, government finances came under enormous pressure. Instead of investing in education, healthcare, infrastructure, and development, billions had to be diverted towards security operations, intelligence, rehabilitation, and law enforcement. Pakistan was also hosting millions of Afghan refugees, placing additional pressure on public finances, healthcare, education, and infrastructure. Many people believe Pakistan was generously compensated for fighting the war on terror. The numbers tell a different story. Pakistan received roughly $33 billion in total assistance, but about $14 billion was simply reimbursement for the cost Pakistan had already incurred. $11 billion came as economic assistance, and about $8 billion was security-related support. In other words, Pakistan received only a fraction of more than $152 billion it ultimately lost. In fact, at its peak in 2011, terrorism was costing Pakistan nearly $24 billion every single year. The Center for Research and Security Studies also estimated that terrorism shaved almost 3% of Pakistan's GDP annually during the worst years, and the consequences didn't disappear overnight. Years of weakened exports, reduced investment, slower growth, and rising security expenditures contributed to structural economic weaknesses. These vulnerabilities later fed into persistent balance of payment pressures, repeated depreciation of the rupee, and declining investor confidence. For instance, Pakistan's stock exchange reflects that very story. After reaching a market capitalization of roughly $100 billion in 2017, it fell to around $27 billion by 2022 before beginning to recover. Markets moved for many reasons, but prolonged security concerns combined with economic instability played an important role in undermining investor confidence over the years. The story of terrorism in Pakistan is therefore not just one of lost lives, it is also the story of lost factories, lost investments, lost exports, lost jobs, lost opportunities, because when economists calculate the cost of terrorism, they don't just count what was destroyed. The greatest economic cost of terrorism isn't just the wealth a nation loses, it's the future it never gets the chance to build.